the benefits and challenges of owning commercial real estate.
Yeah. And so commercial real estate and real estate in general is a great way to help you keep a lot of the money that you earn. I'm not a CPA. I'm not an accountant. I'm not making any promises. But what I am saying is there are tax code that's favorable for commercial real estate owners. So consult with a CPA, right? Going back to your partners, make sure you have a great partner set up so you can understand that. Cash flow. This works kind of for leasing as well. But one thing about owning in a lot of cases is your cost is level. You can control it more. Where think about a lease where, you may sign a 5-year lease, but after that 5-year lease, you're really at the mercy of the owner as far as the landlord. So it could go up, a lot, or the conditions could change. When you own, you control that. And then also gives you more flexibility to earn cash. So not only do you have, let's say if you're a barber, right? Or a salon, a hairstylist, you own the building that you operate out of. So one, your fixed payment is level. Then you're able to rent out booth space. There's benefits for cash flow from from different opportunities when you own. And then equity. So like, again, going back to that barbershop opportunity, I worked hard for 10 years. I don't know. I think I might want to do something different. Okay. How are we going to do that? Commercial real estate building appreciates in value. Shoot, I got $1.5 million in equity. Okay. Maybe I sell that and start to use that to do it. And then there's a really cool thing called sell leaseback. So in that situation, as a barber, you can say, I don't want to be the owner anymore. I want to give up my equity position. Give me my $1.5 million, but I don't want to leave this space. Hey, new owner. So real estate agent, I need you to find a buyer that is okay with me staying. I'm instead of paying the bank or the finance company, I'm going to pay the new owner a lease. So I'm going to get $1.5 million back to me for selling the property. I'm going to stay in the building. I'm going to continue to make money off of my booths. Maybe I won't make money off of the billboard, but who cares? I got $1.5 million. I'm going to pay you a lease for 5 to 10 years, and we can have that conversation when it comes. Maybe I don't want to do anything with barbering anymore after I start this new venture and I move to Florida or whatever I want to do. But that equity build is happening year after year after year, and it's passive, it's quiet, but it can be massive. So there's value in that. Whereas that 10 years passes when you're leasing, you don't get any equity in the building. You may be able to sell your business, your clientele list, but you're not taking advantage of that equity build.
At the end of the day, the good thing is, like you say, you got a consistent, if it's $1,500 a month for the next 30 years, depending on how long that loan is, 25, 30 years, whatever. So you're going to pay $1,500. So your cash flow is there. You know what you're going to pay all day, every day for years. Whereas the difference is if you do rent, what happens with your business, you end up getting a lease that may go up, and then guess what you do? You move. Now you move locations where you've established yourself at one location. Now you got to reestablish yourself at another location. So really did that to lower your overhead, which makes sense. And a lot of small businesses do that. And I'm just saying that is kind of the fallout of leasing, because what ends up happening once your rent goes up, you end up moving.
Yeah, no, that's a good point. I do want to add a caveat, because even though you own, your payment can change. As you know, Jay, insurance could change. So therefore, when you talk about mortgage, you're talking about just P&I. Or go back to the SBA 504. You have the ability to fix it in for 25 years, so that won't change for the life of the loan. So just want to caveat that it could change, but you just still have more control.
So let's go ahead up to the challenges, and we'll go ahead and start wrapping it up.
Yeah. So, market volatility, COVID, right? From a business perspective, there were winners and losers as far as there were some opportunities that were created from COVID, and then there was some hard time that was created from COVID. Prime example of challenges when owning. So there are challenges when it comes to owning. That's one of them. And then management challenges. Unlike leasing, when something goes wrong, where you can call the landlord to get the AC fixed, when you own, you're making that call. But as I always say, most things can be mitigated. Market volatility, you want to make sure you have savings, weather those storms. Despite the challenges, I'm a firm believer in there's extreme upside to owning commercial and residential real estate.
All right. Well, hey, man, appreciate that. Going to move over some final advice and some of your takeaways from your presentation today.
Yes, understanding the bank's perspective. Listen, think about what we're thinking about. And that will help you understand that one, it's not personal, it's business. And let's talk business. Let's talk logic. Let's talk numbers. Let's talk what makes sense. And that will help you, give you the confidence to have this conversation, and also take you a lot further because you're going to be more prepared to receive some of the information. So we take in money for deposits and we lend out at a rate higher than what we pay on deposits. And that's a net interest spread. And that's in addition to service fees, how banks make money. And the more risky our loan portfolio is, the more reserves we have to hold back and cannot lend out. Just understanding how a bank's perspective is very important to understanding some of the reasons and some of the policies, some of the yeses and nos is based on understanding that perspective. Circling back to the 5 C's of credit, it's really a global perspective into how we think. 3, aligning loan purpose with products, making sure that the story that you're telling for the purpose of the loan makes sense. And then lastly, having a great advisory board. Again, it's kind of like 4 is like all 1, 2, and 3, because you can get help with all 3 of them with the right part. Those partners are built with not being afraid to just go and just ask questions and start the process without concern of, yes or no. I'm an industry professional. I've experienced no's and credit requests even the last 5 years. The most important piece is to understand why. That's the biggest thing. Anytime you get a no, I don't care what it's for, and notate it. If it doesn't make sense, I want to understand so I can better position myself next time that I decide to, extend myself for credit. So any additional information would be really helpful for me to understand. And most people are willing to say, here's what we see and take note and think about it. Does it make sense? And then go on to try to, navigate and improve whatever area that is before the next time you apply. The next bank you talk to, you say, hey, listen, here's what my situation looks like. Will that be a problem for you? Oh, yeah, it is. That's still a problem. Okay, well, great. It's nice meeting you. Moving on. Same thing. Oh, that's not a problem for us. Okay, great. Yeah, let's move forward. It saves a lot of the no's once you understand the why behind the first no. So,
right.
Yeah, no, that's it.
Hey, we appreciate Jahaan's time. We appreciate all of the people that listen to us. Look, go back. If it's something that you missed, it's something that you didn't understand, go back and rewind this. There's things that maybe we didn't cover, or put that in the comment section. Let us know, did you like this or not? There's things that tie into this that people need to know about and help them get where they want to go.